we already see kind of a reversal right here, and this upswing is still a test of what? A test of the downswing. Okay, so this is still a test of the prior downswing last week. So at that time, last Tuesday, we definitely get some kind of the reaction. It sort of tested this big bearish bar, okay, and then we have a reaction. Next day, we got to follow through to the downside. So it acted like a reversal. So a reversal of the immediate upswing, and then there's kind of the resume of the downswing. But anyway, we all know that on Thursday, there's a super important event, which is the CPI. So the CPI is kind of is somewhat better than expected, and or at least that's how the market interpret. So we get a super impressive bar. This is the follow-through day that we had in this year. I think this is the best follow-through day that we had in this year. So the best up bar that we had in this year. So just this bar alone is somewhere around 5% or 5.5%. So we never see that since this year. So I think that is right. So anyway, that bar actually changed everything. So what has changed? So first of all, it definitely reversed the immediate resumption of the downtrend. Because if you take a look at the structure right here, so this is like an upswing, and that's somewhat like a trading range, and that's kind of a spring. So we got a like a sign of strength rally up here, and attempt to have a continuation to the upside, but this bar right here sort of just failed. So this is kind of the fat bar. So the fat bar actually makes it a failure. So it's failed to commit above. So instead, it's just kind of commit below this trading range. Okay. So from here on, this is just a test. But right after that, this CPI bar actually just reversed everything. So it's definitely reversed even this bar right here. So if you think this is really a commitment bar or a significant bar, that's very impressive to the downside, but take a look at this. That bar actually reversed, and not only reversed on this bar, but it also commit above this line or this line or this area. So I call this an axis area. So this is a very important area. So I don't really want to just draw a line, because when we refer a key area or key level, usually is an area. So this is the area that has been tested quite a lot of times. So you can even just drag below. Okay, so definitely a lot of interaction here, 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 here. So once it's breakout, coming back, have a tested, reversal, going up. So this has become a support, bouncing up again, and then it just kind of want to penetrate, inability to rally. So this become a resistance again. And this is again the resistance. So that bar reacting to CPI is actually very important. So not only it just kind of commit above this Dow bar, this is the Fed bar, but also it just commit above this axis area. Okay, so this is a very key area that's the bull need to show its commitment, that it actually can commit above. So if it can, then definitely I think we are still on this upswing. So the swing is still up short term. So what about slightly longer term, or maybe from a longer perspective? So I think you can definitely see it right here. What is this? This is still a down channel, right? So the down channel is still intact. So there's nothing changed on this long-term trend. So since this year, so there's still a down channel right here. And in fact, it's approaching the supply line. So every time it touches supply line, we see kind of very significant reaction right here. So in fact, it's the start of a downswing. Okay, so definitely watch out for that. So long term, the trend is still down. So just defined by this down channel, and slightly medium term, we still have this trading range. So at this point, I thought about like, well, this could be like a UTED uptrust after distribution, and that could be the inability to rally, break the ice, and then it just fall through the ice, just struggle to climb back up. But now it sort of still prove this, the whole thing is still a range. It doesn't really break through the ice or the resistance or the support. So in fact, this is still a trading range. So if you take a look at the middle of the range, it's sort of this level like 3900 or 3950. So this is still a trading range in the medium term. So it's still bouncing up and down, and that's why I think this CPI bar is very important. Whenever you look at it from different perspective, whether it's a trading range, then it is the middle of the trading range, and whether you look at it as an axis line or the axis area, that's a very key area that you need to overcome and come in above. Or whether you look at it from a slightly smaller perspective, that is a very significant down momentum bar coming to the downside. So it's still reverse and just overcome and come in above this bar. So either way, it's a very bullish bar. And in terms of the current swing, so the current swing since October, since the spring, okay, so this is a down swing. This is a kind of a swing level support, and this is definitely a spring, a temporary commitment below the support level, and then followed by get back up, and then started a rally. So eventually, this swing is still up. Okay, so this is the current swing up. And in terms of the very short-term movement, like in a few days, I think I don't really see a lot of the threatening price action. So this certainly is super bullish, and that's kind of still have a follow through to the upside. Although we got a bit of the like the pullback, but look at this, supply has been decreasing, and look at the results, is just kind of negligible. So there's a very mild pullback. And yesterday it sort of have a bit of the supply come in with increasing of the volume. So you can definitely see the rejection tail right here. So there's a rejection tail yesterday together with a increasing of the supply. So suggesting that there's still presence of supply, but how much? How much is the supply? We can definitely see that that's the supply. It's sort of decreasing. Okay, so supply is not threatening at this point, at least. Okay, yet. So in terms of the resistance level, I would say that it's still testing this important bar. So this is, I believe, this is another CPI bar. So this is the CPI bar that actually trigger or reverse the downswing, reverse the upswing. So that's the bar that is still testing. And if you take a look at the supply line of the down channel, is kind of right within this area. So in fact, it's testing kind of halfway of this bar. All right. So I believe that short term, it still probably have some more room to go up, and until it's probably tested the upper part of this bar, and also coincide with maybe this supply line. All right. So this is what I expect, because so far I can't really see any increase of the supply or increase of the downward movement. So far it's still kind of encouraging for the bull. And if you take a look at the stocks, like I covered in my stock trading ideas, stock watch list last week or the week before, they are still generally doing very well. So apart from one or two or quite a number of the value stocks, they probably got a bit of the correction, but the rest of them are still very healthy without much supply. Despite this rally is driven by a lot of the beaten down stocks, like the index linked stocks. So you see that there's a ton of the super oversold stocks, something like this, and then they just climb back up from the extreme oversold condition. So that's actually driving this rally up. So not extremely healthy, but at least the stocks that we focus, those potential outperforming stocks or the potential next market leadership stocks, they're still leading and keep breaking new high. So that's the important part. So in terms of the shorter time frame, so let's take a look at the hourly time frame. So if you take a look at the hourly time frame, this is still the S&P 500. So that is the CPI bar. So reacting to CPI and super bullish, and subsequently we definitely see some sort of the consolidation. So in what way? In a form of the upsloping range. Okay, so this is still like a trading range, but it's sort of upsloping a little bit instead of the horizontal trading range. So if we want to just analyze a little bit in detail, then you can definitely tell that yesterday there's increasing of the supply. So there's bearish results. So in order for the bear to commit, then definitely I think that you can maybe label this as a uptrust, at least, if not a U-TED. So if there's a U-TED, then definitely we want to see a break below the upsloping support level. So definitely a break below, and followed by another horizontal support, another break below. So you can definitely tell like this is somewhere around 39.60 to about 39.80. So break of this area, then I think there should be probably another significant pullback. But even if it does that, then I think it's still considered as a pullback, because as long as it's still not violating kind of this bar. So this is the bar, is the very last last line of the defense. So this is the bar that it cannot be violated for the bull. So if the bull is going to keep charging up, then it definitely need to defend this bar. So I will still kind of give it like the strength of the bull, even if it retraces to about probably halfway of this bar. Okay, that's still considered as healthy, and then eventually it could still charge up. But I think the most bullish case is definitely it could resolve itself out from this upsloping trading range in the hourly time frame, and to just keep charging up until it hit probably the around 4100 or maybe 4150. But if it hit that, then I think we all need to watch out, because first is definitely the supply line level, like this 4100. So, and next is definitely this huge bearish bar. Okay, so this is the very significant down bar that actually reversed the prior immediate upswing. So if you take a look at the slightly longer structure, let's look at this. So take a look at this, a downswing, right? A downswing, and we have this big bearish down bar. So after a downswing, often we see that it's sort of like hitting an oversold condition. So this is really the oversold condition, and then we have a bouncing up here. So that really is like a rally of the oversold condition. So look at where it actually stopped. So it sort of tested this big bearish bar. All right. So next, also, this is another significant bar. Okay. So, and then it sort of get tested as well here. And then this is also the other bar that get tested first here. So the next logical place is definitely this bar. So this is the bar that I think most of the technical trader is focusing. Definitely we want to take a look at this area as well. So I think there's probably still some more upside, but how much? Probably this much. So if we definitely see some kind of a reaction of this resistance area, then I think we need to judge the reaction. So how does the reaction look like? So whether it's some bar like this, similar to this, then I think that's definitely not good at all. So not really good for the bull, but might signify a start of resuming of the bear trend or resuming of the downswing, and then it would probably go back down again. However, just in case the bull just keep charging up and there's not enough supply to hit the price, then I think that is sort of the positive reaction that we could anticipate. So if that's the case, then likely that it could still keep charging up and then to hit the next level, 4300. So maybe I will say this level first, 42, 43. So that's the next area of the resistance. So I think until we definitely see the reaction, we need to still maintain positive upside, because so far there is nothing threatening about the price action and also the volume. So I expect the least resistance path is still going up until we see a reversal or reaction to the downside. Then we need to judge the quality of the reaction. All right, so far short term is still up. So we're still in this upswing. The swing is still up, and I think the area that we need to focus is definitely 4100 here. So in case it's sort of uptrust a little bit, then give it a bit of the leeway, 4150. And of course, that only provided if it could resolve itself out from this hourly trading range. The upsloping trading range is the first level that you need to get resolved itself out. Maybe have a test and then keep going up and then eventually just charging up. So in case if it fails right here, it's possible as well, then likely that this is the next support area that you need to break, 3960 to 3980. So if it breaks down, then likely we'll just go back down to test this area. So somewhere around 3860, 3880. So we can probably take this. So this is the first line of the defense. So until then, I think even if it bounce up from here, that is still considered a bullish case. If you want to catch my latest videos, click on the subscribe button and the bell right now so that you get instant notification once I upload my latest video. If you want to check out my online courses, go to tradeprecise.com to find out how to profit consistently from any market without using complex indicator or understanding any financial statement, no matter you are trading or investing.